I'm David Frazier, aka the Market Monk. For those of you that are not familiar with this show or that are new to this show, this is a daily show that is on every weekday, Monday through Friday, whereby we cover important developments in the worldwide economy, the financial markets around the globe, as well as geopolitical developments. Any factor and or development that we think might have an effect on the value of your portfolio. And I'll tell you, I'll repeat that on all these shows because we always have new persons joining our show every day of the week. So that's what this show does. We just talk about what happens on any given day, and not what happened a few days or a few weeks ago or what we think is going to happen tomorrow. Just what happened in the markets today, in the economies around the world. And our mission is to tell you everything that you need to know that might affect the value of your portfolio and nothing more. So, therefore, this show might, on some days, only be 2 or 3 minutes in length. And other days, it might be 20 minutes in length. But generally, we try to keep the shows less than 10 minutes. Having said that, there were no major developments around the world today. And as a result, we saw stock market indices in most regions of the world pretty much unchanged today, essentially flat today. There was a modest pullback in Brazil's major stock market index, and there was a modest pullback in U.S. stocks today. As far as stock market indices are concerned, to be specific, the Dow Jones Industrial Average was down approximately 129 points today. That's 129 points. Now, why did stocks pull back here in the U.S. today? Well, in my opinion, they pulled back for only one reason, and that is price momentum statistics indicated this past Friday that stock prices in general were trading at overbought levels, that the price momentum, the upward momentum was slowing substantially, and that their stock market participants were not bidding up prices any higher at this point in time. And therefore, generally speaking, when stocks get to these overbought levels, you generally see a pullback during the ensuing days. So you're probably going to hear a lot of different reasons stated by so-called experts on the major daily broadcast shows. But in my opinion, this was stocks pulled back only for one reason. They were overbought on a short-term basis. Now, as far as Brazil's stock market pullback, there was an economic reason for that, and that is Market Economics. That's a firm that does hundreds of economic surveys every month throughout the world, showed that manufacturing activity in Brazil declined a bit last month. So there was a good reason for stocks to pull back a bit. Even though stock prices in Europe were virtually unchanged, we got some really, or I should say very positive news out of Europe today, showing that manufacturing activity in the Eurozone rose for I don't know how many months now, but it's been several months in a row. But even more importantly, the manufacturing activity, the pace of growth increased, or the amount of economic activity in that sector is what I'm trying to say, rose to the highest level and at the fastest pace in 3 years. So that's a very positive development for Europe. Well, I really don't have anything else to talk about today. Stock prices pretty much flat in most regions of the world, down a bit in Brazil, not surprisingly, given that manufacturing activity slowed, down modestly here in the U.S., simply because, in my opinion, based on a lot of research, that stocks closed last week in substantial overbought territory. So that's it for today, and I'll speak with you again tomorrow.